Alright, hello and welcome to Camel Finance. I'm your boy Camel, and yesterday I was putting out this video and said most people are probably going to get this wrong, and of course I was referring to this decline into the weekly cycle low for the S&P 500 and for equities in general. It's pretty funny because even though I spent almost 20 minutes odd yesterday talking about how a lot of people are probably going to get this wrong, there's going to be a lot of psychological warfare going on, a lot of people seemingly did not want to hear what I had to say yesterday. A lot of people were saying, no, this is crowded, everyone's expecting a correction. So I just want to show you a couple of, I don't know how to describe it, let's call it cracks in the system that are confirming my belief that we will see this decline into the weekly cycle low. So I'm not going to spend any more time on this particular chart because I've done this chart to death, frankly. But if we take a look at the S&P 500 here, after spending 3 weeks in the upper risk zone, the S&P is now reversed with one of the largest weekly candles we've seen since March. It's currently trying to defend the weekly 5 exponential moving average. And although we had earnings, which was a mixed bag, Amazon smoked earnings yesterday, Apple kind of missed. But take a look at what's going on under the hood here. When we jump into this chart, we can see we've had a massive major reversal off of here. Now, I'm not saying that this has to go straight down like this, but it's funny that this is being predicted with a totally different system to this whole weekly cycle system, right? And we still get roughly the same type of expectation. We still get some kind of pullback, some kind of flush out. Before then, we get to spend either 4 to 6 weeks coming up and roll over, or continue to follow through to all-time highs, which of course is the current primary expectation from my perspective. So two completely different systems arriving at a very similar conclusion here. And I found this as well, and this speaks to what I was talking about in yesterday's episode. For the NASDAQ, the 50-day trading cycle low is due next week. Now, to preface this, I don't use 50-day trading cycles for the NASDAQ. As you know, I use the S&P as a proxy instead. But either way, the 50-day trading cycle low is due next week, probably on August the 8th. So regardless of earnings, we're likely heading lower, at least into next week. And so if I hop into this chart, you can see the NASDAQ makes quite clean 50-day cycles, as you can see here. Now, we could argue about whether or not these are true cycles. I personally, like I said, don't use these cycles. But undeniably, the cycles are still down. And as I said yesterday, the interesting thing about cycles is when we are early in a cycle and a company releases positive earnings, the market goes up, and the market attributes that move upwards in the market to good earnings. But there are plenty of times, if you've been in the markets long enough, if you've bought enough stocks and shares over the years, then you will have experienced a time where you're holding a stock, earnings are really good, and the stock goes down anyway. And you think, well, what on earth is going on? And ultimately, it all comes down to where we are in the cycle. And that's why I use cycles, because price is king. Cycles will unfold. They will play out regardless of what's going on underneath the hood. As of yesterday, we also had the NASDAQ bullish percent index give a sell signal. So it broke back below the crucial 70% level. The red bars highlight the previous occurrences, and it's pretty consistent with the pullback phase. So you can see the black line at the top. Every time it gives a sell signal, it drops below 70. We denote it with red vertical price bars. And at the hard right edge, it's no different this time around. Back below 70, denoted by the vertical red price bars, tells us to be open to seeing a deeper correction. As always, we've got a lot of forces at play simultaneously. The Fed's new BTFP program has just set a new high. So this is a stealth QE, isn't it? This is them printing money, but instead of directly using it to prop things up and add it to the balance sheet, instead they print the money and they disguise it as a loan that they give to banks and hedge funds and alike, and then they go and buy the assets for them. So this is still QE, but it's a stealth QE. Remember, these days QE never identifies as QE, always identifies as something else. And you can see the usage continues to increase. So we are still seeing the markets propped up with artificial money at the same time as we're seeing unrealized losses on US treasuries, total $1.1 trillion, which means roughly 1/10 of duration losses caused by the Fed's rate hikes are just being papered over. This is a pretty big band-aid. But like I keep saying, it's probably going to continue for a while. But markets do not move in straight lines. We probably have to have this correction, then we can attack the all-time high, and then finally something can break and all of this stuff can finally have to face reality. We can finally have the meltdown that everyone's been calling for the entire way up. Because of this stealth QE, because of the effects that it will have in a lagging sense, remember QE and printing always lags by about 12 to 18 months, I still believe we're going to see Bitcoin continue to do Bitcoin things. We are, I believe, witnessing maturity in the Bitcoin and crypto market. You can see Ethereum has now lost 60% of its value versus Bitcoin since its all-time high back in 2017. So ETH continues to lose value to Bitcoin, decaying for a straight 331 days now. And this is how most altcoins die. This is how most altcoins will die. It's a death by 1,000 cuts type of scenario. And I believe this represents maturity entering the market. People are slowly starting to realize that, yeah, fine, Bitcoin's great, and then you go and find these other projects and they look promising and some of them outperform Bitcoin, and actually I just want to make 1,000x returns instead of just 5x with Bitcoin. But over time you realize, particularly in amongst all of this crazy printing of money, this QE that identifies as a loan program, do you want something like Ethereum, which nobody even knows the issuance schedule or the total supply yet? Or do you want something completely hard, something with a known and unchangeable supply issuance schedule, such as Bitcoin? And this is why I say I believe we're watching and witnessing in real time a maturity of the market. We are starting to see investors work out that actually I would rather have safe, slower returns in Bitcoin than speculative plays on Ethereum and stuff built on Ethereum. And continuing on with this theme, future normies are going to be talking to exchanges and saying, what do you mean you're out of Bitcoin? Look at the decline. This is truly the first time we've ever seen this in an epoch. This is the first cycle where we are truly watching Bitcoin supply dwindle. There really isn't enough left. And the only way to resolve this is with higher Bitcoin prices. Not to mention 55% of the circulating Bitcoin supply hasn't moved in the last 2 years. So this is a testament to long-term Bitcoin holders standing firm in their belief. We are in it for the long haul, and I bet a bunch of you watching are as well. And here you can see supply loss active in orange, up and to the right, a new all-time high. People are not selling their Bitcoin, certainly not without being coerced out of it by significantly higher numbers. And so despite a bunch of people telling me I'm probably in a crowded trade expecting a dip, despite a bunch of people not agreeing with me, keep in mind, that's fine. You don't have to agree with me, but I can't, if you message me on YouTube or Twitter, I'll always do my best to respond. I'll always do my best to be respectful about it. But I can't, you have to understand this. I'm a trader and I have to sit here and come up with an idea and a plan and then stick to that plan. If you message me and say, you're wrong, bro, it's going up, what do you want me to do? You want me to just go, oh, okay, sorry, man, I'll go max long across the board? I mean, I have to do what I can do, right? And what that is at the moment is I'm remaining long on the S&P 500, but as we go through these charts, you're going to see I am close to flat. I'm closer to flat than I've been since the lows back in October. So as it stands, all the while we're above the blue upward sloping support line, I will continue to push this trade. The stop has been choked up here to the red dashed line. And frankly, it seems to me like we could be working on, you know, this two drives pattern I talk about a lot, where we come down, counter trend bounce, undercut that low, make a swing, and that's where we mark the cycle low. Well, do you think it's possible that this is what we're going to do? Come down, counter trend bounce, undercut that low into the cycle low, right? And there is the swing, there's the cycle low, and here's where we get long again. So it's going to be really interesting to see how this plays out. Is some level of counter trend bounce here completely to be expected? Yes, but then I do think it's going to roll over into that cycle low before we can get a reversal. And of course, if we do something like that and form a lower high, then we can draw a trend line and buy the breakout as well. So this is the same thing I do over and over and over and over again. The entire time I've had this channel, I haven't really changed anything, right? I draw trend lines and I buy breakouts and I put the cycle low markers on here and I look for swings inside of those timing bands. So if you disagree with me, that's absolutely fine. And you're more than welcome to challenge me on ideas. I welcome any comment or any challenge. I always want to be questioning myself and my beliefs. But if you expect me to just get a message from someone on Twitter that says, you're wrong about exiting the market, you're wrong about waiting for pullbacks, you know, what kind of trader would I be if I was just like, oh yeah, sorry, bro, sorry, yeah, I'll go back to full exposure long again. You know, I can't really do that. So here's the NASDAQ. Again, people are probably going to see some kind of bounce up here and go, Camel was wrong. Yeah, maybe. But at the moment, we're still making lower highs. We're still overstretched and overdue for a correction. And something like this could be coming. So if that's the case, we'll get back in down here and we'll go again. Same with the Dow, completely flat on the Dow, as you can see. And yesterday, I cut Apple at about 191 and change. So as soon as I saw that we got a retest, a back test of this yellow line and then rolled over in the after hours, I just cut this trade. And so far, that seems to be the right thing to do. So I'm out of this trade. It's been a really good run. 191 is pretty close to the high of 198 or whatever. So I would say we did very well at capturing the bulk of this move. We no longer need the long position because this is now closed, profit locked in. And again, this is more cash sat on the sides ready for when that cycle low kicks in. I also cut all of my member stock positions because they're just not behaving the way I want to. They're way too choppy. They don't look anything like this, do they? They don't look anything like a breakout that just goes straight up. They're way too choppy, in and out of profit all the time. So all of those are cut. I've got this massive cash position now ready to go in 2 to 4 weeks time. And again, we're going to be doing exactly what we did for the likes of the NASDAQ when we got in down here and rode the big portion of the move. We're going to be getting ready to do that all again up to new highs. It should be even quicker and even more violent than this move was. So expect to see fireworks coming out of this channel. Expect to see massive positions. Expect very, very high quality and high probability setups for the members only as well. Coming out of those cycle lows, there's a massive opportunity here. And that is why I'm choosing to move into cash at the moment. Worst case scenario, the market moves a little bit higher first. And so what? I don't lose anything, right? I'm sat in cash from a position of power waiting for the highest quality and highest probability setups to come to me. So as you can see, I only really have the S&P. That's like my entire equity exposure at the moment. I of course have the blockchain related stocks, but we're going to keep pushing those into the cycle lows as I've been saying over and over again. Gold, we're still looking for a swing. We haven't got it getting stretched in this cycle, so I would expect to see this reverse. But of course, the dollar at the moment is the problem child, as you can see here. All the while, this is still continuing to move higher. Gold and silver are going to struggle, but undeniably, this is going to roll over. It's a case of when, not if. And of course, Bitcoin, again, a position of power here, waiting for that cycle low. This becomes the highest possible probability setup we can possibly have to offer from the market. So once we get down here and once we find a swing, possibly off of this support line in red, once we do something like that, then you better believe it is going to be time to go again. And then of course we get to find out whether or not this primary expectation is really possible. Is this the sort of thing we can do? We're getting dangerously close to this timing window now, as you can see. Once we enter this timing window, we get to finally find out whether we're going to have a full bore bullish melt up, or whether we're going to deviate away from this and have to establish a plan B. Plan B for initially will probably be treating this thing like a standard 4-year cycle, meaning we go sideways into the halving, and then at the halving expect a blow off top move. However, we also will have to be open if we deviate away from this fractal to seeing some kind of meltdown and death of Bitcoin. I put 1% or less probability on this outcome, but it is a market and we certainly couldn't rule it out. So I'm afraid what you're going to see from me for the next couple of weeks is probably not what you want to see. I know everyone wants nice setups called out ahead of time, up only, and loads of profits, but markets ebb and flow. Markets don't move in a straight line, like I've been saying over and over again, and like I will probably continue to say every day for a couple of weeks. We are probably going to see a lower high form up in the best case scenario. So if I hop back into the S&P 500, we're probably looking in the best case scenario for a big counter trend bounce here that then rolls over into that cycle low. This is probably the absolute best we can hope for. And the worst case scenario would literally be a meltdown, something like this, all the way down here. Either way, like I keep saying, once we get here, that is the go signal. That is the time to get aggressive. That is the time where it's super easy to manage risk. We've got really clear invalidation. We've got an easy expectation of a minimum of 4 to 6 weeks of bounce out of this cycle low. But for now, I don't want to be chasing this market. I don't want to be having unrealistic expectations that this is what's coming next. I mean, it is a market, anything can happen, but it just seems like we need to reset. The cycles are telling us that. We've known this for a while, since all the way back here. I was talking about the cycle getting stretched and we need to be open to seeing a weekly cycle decline. And now we're finally here. That's my plan and I'm sticking to it. Of course, as always, I'm open to be proven wrong. If we do something like this and then come up, then I will have to enter higher up than we are currently. But again, I will be able to look back at this chart and say, yeah, we caught the bulk of this move, the bulk of this move, the bulk of this move, then we missed a little bit, and then we caught the bulk of this move to all-time highs. So overall, I will have still caught the vast majority of the market, but I want to make sure I put the odds in my favor. I want to make sure I have levels to manage my risk around, and I'm not just stabbing in the dark and hoping for the best. So patience, patience, patience. I only have to say this about once every 6 months, and for the rest of the time, we are typically long across the board and sitting back and enjoying profits. But like I keep saying, we are at that time now where patience is imperative. So I'm, as you can see, almost completely flat. Most of my exposure is just in Bitcoin and the crypto related equities, where I'm looking to buy dips out of those 60-day cycle lows for Bitcoin. The final piece of equity exposure I have is that S&P 500 trade, which I've spoken about over and over and over again. And the rest of my positioning is entirely in cash, ready for that cycle low to occur. When it does, you will see me get full bore bullish again. You will see me start to take big positions and do what we always do on this channel. Once we get closer to the time when it's time to execute, then of course I will start to call these positions out ahead of time so you too can see how this is done in real time. In the meantime, it's Friday, so I hope you have a great weekend. Look after yourselves. Take care from me. All the best. Cheers. Bye.